Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schuller here in studio on this Christmas Eve. Well, we're set to start a holiday-shortened trading week, and of course, we saw the stock market close yesterday higher. It is closing early today for Christmas Eve. Trading goes until 1 p.m. Eastern, and the market is closed tomorrow for Christmas, too. Well, because of that, it's expected to be a light trading week. Still, the S&P 500 started the week with gains, and early winners in 2024, like technology stocks and semiconductors, led the way. We also saw some deal activity before year-end, with Honda announcing it has entered official merger talks with Nissan. Xerox, meanwhile, said it's going to buy the printer maker Lexmark. Let's take a look at what's on tap in today's show. Traders will be in the Christmas spirit over these next few weeks, and not just because Christmas is tomorrow. The typical so-called Santa Claus rally period starts this morning. Jason Ware, Chief Investment Officer and Chief Economist at Albion Financial Group, tells us what to expect. And it's not just the stock market that investors are paying close attention to. The crypto space remains in focus after the price of Bitcoin surpassed $108,000 a piece earlier this month. An industry expert will join on what's going to drive that narrative in 2025. Plus, streaming giant Netflix will become the latest streaming platform to exclusively broadcast the NFL when a pair of games kick off tomorrow. We'll break down what it could mean not just for football fans, but also for the NBA, which historically is the league that's been in the spotlight during this particular holiday. Well, a moment ago, I mentioned the start of the Santa Claus rally, but what exactly is that? It's a term that we've used on Wall Street for a while. And of course, it is a period that lasts 7 days, including the final 5 trading days of December and the first 2 trading days of the new year in January. So in this case, that starts today and runs through next Friday, January 3rd. Now, according to the Stock Traders Almanac, the Santa Claus rally has resulted in an average gain of 1.3% on the S&P 500 since 1969. Additionally, the Santa Claus rally has occurred nearly 73% of the time since 1990. That doesn't, however, include last year when the S&P actually pulled back about 1% during that time. Well, for more on the markets and what we can expect is Jason Ware, he's a Chief Investment Officer and Chief Economist at Albion Financial Group. Jason, great to have you on the show. And even though it might be a light trading week this week amid the holidays, how are stocks set up into year-end?
Hi, Kristen. Good to be with you this morning. So, the backdrop for equities continues to be constructive. Obviously, we have that seasonality tailwind going for us, as you mentioned, first day of the, Santa Claus rally period, which is typically good for stocks. Not always, but typically good. December writ large is typically a strong month. I think if you look at the market technicals and if you look at fund flows, things continue to point toward perhaps a strong close into year end here. Beyond more of the technical and seasonal elements, the fundamentals still look good, right? We have an economy that's resilient. All of the economic data that's come in has shown an economy that's continued to grow close to 3%. We have inflation that, while not at Fed target, is benign. We have a Fed that's cutting, maybe not as much next year as traders would hope, but the Fed is still on our side. And we still have earnings that look good. Of course, we're going to get into earnings season, Q4 earnings season here in January. So a lot of positive elements to the market, I think, that's keeping people holding on to their stocks.
And with that, with the fundamentals strong, Jason, as you noted, what are you expecting for earnings growth ahead?
Yeah, great question. Important question. The most important question. And look, the good news is that we have that resilient macro, right? The macro economy is the fountain from which corporate earnings flow. And as long as we hold in, i.e. avoid recession, then I think the base earnings picture remains intact. And that base earnings picture is one of top line growth, something a little better than nominal GDP. So we're thinking something like 5 to 6% revenue growth into 2025. And then some margin expansion. We know that margins came down in 22 and 23 due to higher interest rates and, more importantly, higher inflation. Both of those have begun to improve. The picture there has improved. We're seeing, corporate management doing what they do best, which is getting more efficient during difficult times. So we expect some margin expansion as well. But then, of course, we had the election, right? And it looks like tax cuts might be on tap for next year. And a lot of deregulation. So our view is that we could actually see earnings come through in the mid-teens next year. And if so, that should be great for the stock market.
Mid-teens certainly would be a benefit for investors. Jason, I do want to drill in more on inflation because based on what we heard from the Federal Reserve last week, it does expect that inflation will remain sticky, in fact, higher than previously impacted. What does that mean for money going to work in this market?
Yeah, so I think the good news is that even with inflation sticky, i.e., our base case for a couple of years now has been that inflation would come down, i.e., we'd see disinflation. But we wouldn't get back to Fed target maybe as soon as everyone would like us to see. And of course, Fed target is 2%. Sticky inflation to us, and I think we're seeing that in the data, both PCE and CPI, is something like mid-twos, core inflation, 2.5, 2.7. And the good news is that while that's not target inflation, it's close enough for the stock market and it's close enough for the economy. And I think things can do okay in a 2.5 to even 3% inflation environment. Again, over Fed target, but still constructive for the stock market.
Jason, given this, which sectors do you think will lead the way ahead?
Yeah, well, I think you continue to dance with, those who brung you, as they say, and that's technology. We're still overweight in mega cap technology. We think that's where the earnings growth is. We think that's where the widest economic moats are. Valuations, yes, are high for some of those, but we get tactical within there. We're overweight Google, for example. We're overweight Amazon. We can talk about others if you'd like. So technology is an important one. We think there's relative value in healthcare, high quality healthcare companies that have been sort of left behind in this bull market. We wouldn't be surprised if 2025 is their year. There's a fair amount of bad discounted in these stocks. Valuations look good and growth is still there. There's a secular dynamic. We think financials look good here on deregulation. So there's areas you can certainly be. Small caps look interesting, although if we're going to have sticky inflation and therefore fewer rate cuts, that might be a little bit more challenged than we thought a few weeks back. But on a relative valuation perspective, small caps will start to work at some point in this bull market.
Interesting, Jason. And I want to get your take on your outlook that is particular, as we've heard the president-elect say along the campaign trail that tariffs are a promise from him.
Yeah. So as we look into 2025, we're kind of looking at it as a year of 3 twos, probably mid-twos inflation, mid-twos GDP growth, real GDP growth, and then 2 Fed rate cuts. As we set up going into 25, that's where we are. And of course, those things can change as the information comes in. But that's the setup. And that setup is pretty good for stocks. And as we think about the mid-twos on inflation and getting back to your question around tariffs, it's difficult to say. There are 3 different camps. There's one camp that says these are negotiating tools. There's one camp that says they won't be implemented as discussed on the campaign trail. And there's another camp that says, no, they're coming and they're coming hard and fast. I would probably fall in the second camp, where I think at some level we're going to see tariffs, but they're probably not going to be applied as aggressively as described on the campaign trail, because I think the market is going to put on a short leash just how aggressive they're going to get on tariffs. If they're bad, market falls. We know that Donald Trump pays attention to the stock market as a reflection of his job, or at least how he's doing in the White House. And I think that's going to be the limiting factor. Not only the stock market, but the bond market will probably have something to say about that.
Jason Ware, thanks for starting this holiday shortened session with us. Jason's going to join us after the market opens, and he's the Chief Investment Officer and Chief Economist at Albion Financial Group. We'll see you soon, Jason.
In a little bit.
All right, well, stay with us, because up next, one chief executive shares how companies are game planning for the new year and what the incoming Trump administration could mean for firms. Stay with us.
So, Rob, you are the 11th CEO in Hekla's 133-year history, and you're actually 2 weeks in. You are ringing the closing bell today. Tell me, what appealed to you to take over the CEO position?
Well, firstly, this is a real honor, and what I found truly appealing was Hekla's legacy of being a leader in the silver mining space, a really incredible portfolio of assets, and a deep-rooted culture of innovation. So, for example, the underhand closed bench mining method, which was developed at Lucky Friday, that's really testament to that spirit of innovation, let's say. That not only improved safety, which is a core value at our company, but it really significantly boosted production. The other thing I would say is that the commitment to continuous improvement That extends from everything from community to ESG in general to environmental stewardship. And they're things that I deeply care about. Above all, it's really the talented and the dedicated people at Heckler that really is driving forward the company's success.
Now, what strategic direction would Heckler take under your leadership, and what will be some of your key priorities for Heckler?
As the largest silver producer in Canada and the United States, Heckler really boasts a very high-grade silver portfolio with long reserve mine lives, underpinned by our flagship mines at Lucky Friday and Greens Creek. And so our strategic direction is really going to focus on maximising the value of our really extensive portfolio, and that includes finding a measured pathway to optimising production and profitability at our Keno Hill mine in the Yukon. So there we need to make some investments in some critical infrastructure, foster strong relationships with the First Nations of Nacho Nyack Dun, and really set Keno Hill up for a platform to be a very successful operation and turning it around like we did at Lucky Friday in the recent past.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. Well, chief executives are preparing for an eventful 2025 that includes the start of a second Trump presidency, advancements in artificial intelligence, and of course, the Fed's path forward as the central bank weighs future rate cuts and inflation. My colleague Trinity Chavez recently spoke with Mark Penn, the chair and CEO at the marketing firm Stagwell. More about this after a recent survey that his company conducted. Let's take a look.
How are you anticipating the shifts in trade policies, immigration, and economic priorities due to the U.S. presidential election and the influence it's having on the way CEOs are shaping their 2025 strategies?
Well, overall, I think CEOs are optimistic that the Trump presidency is going to pave the way for better or enhanced economic times, particularly if you're not making manufacturing goods in China. I think we did a CEO survey, about 100 global CEOs, and U.S. CEOs thought that if Trump won, that would be best for the global economy. Chinese CEOs, however, felt somewhat the opposite.
And what specific insights did the survey reveal about U.S.-based CEOs and the concerns surrounding the global economic impact of potential leadership changes?
Well, I think actually they're looking quite favorably towards investments in the Mideast. Particularly with the Trump victory. I think that obviously their biggest concern is the same concern that people have, which was inflation and immigration. And I think businesses want inflation under control so that they can have reliability in their capabilities in order to make purchasing and bring goods to market. I think they're looking for immigration to have control in order to have a trained legal workforce. And so I think trade policy, inflation policy, immigration policy are really three major legs in terms of what CEOs are looking out for with the new administration.
Absolutely. And inflation is also at the forefront of those conversations. And that's a top concern for CEOs worldwide. So based on the survey, how are leaders adjusting their pricing, cost control, and long-term strategies to navigate this persistent challenge?
Well, I think they're having some trouble dealing with inflation because it creates some uncertainty relative to both the inputs and their ability to price, higher in a market that's dominated by AI and technological change. So I think they're hoping that inflation comes down. I think they're looking for a government policy that's going to rein in spending on the government side so that reduces the deficit. And they fundamentally believe that overspending by government probably was the cause of inflation that's giving so many people so much angst.
And from your vantage point, how are other executives and CEOs adopting to build consumer confidence in an uncertain economic environment? And how are these strategies linked to driving business growth?
Well, I think the good news is that CEOs right now do not seem to be concerned about a recession. If I go back to 23 was all about the recession that was going to come. So that businesses needed to cut back, needed to be cautious. I think as we go into 25, they don't see a recession on the horizon. They see a successful soft landing in the economy. And consequently, what I'm seeing with CEOs is that they're making kind of clear marketing, growth, product launch plans in ways that they really haven't done for years.
And given the enthusiasm around technology's role in improving life quality and innovation, how do you see Stagwell leveraging these insights to advise or collaborate with their clients?
Well, I think we're doing that in a number of different ways. We're incorporating AI into some of the self-serve marketing products that we're developing. We're also working on behalf of clients with Code and Theory, our core digital transformation company, to go ahead and make the agents that companies want, rebuild the websites, incorporate AI so that websites are more responsive to what consumers want. I think virtually every contact point between a company and a consumer has to be remade to take AI into account in terms of agents, in terms of content, in terms of understanding who they are and how you can respond to them. And I think that process is just beginning. I think it's going to be an exciting multi-year process.
I want to talk to you about the different emerging areas or regions that are a major focus for investment. What are the trends right now that you're noticing in today's economic landscape?
Well, look, obviously the US economy remains a strong and growing economy with people looking for possibly less regulation and lower taxes. I think, however, looking at the Mideast is probably, I think, the easily the next most important marketplace for new investment, because those economies are in transition and the governments there want to move from an oil economy to a more broad-based consumer economy. And that means all kinds of opportunities, I think, out there. And I think the poll shows that CEOs, 70–80%, are very comfortable making those investments in the region.
Now, there's a lot of things happening in the world today as CEOs are facing a blend of challenges like inflation and energy prices while seizing opportunities in the technology space as well as emerging markets. What key strategies are emerging to strike this perfect balance effectively?
Well, look, I think CEOs are waiting a little bit to see exactly where the administration lands on their trade and tariff negotiations with Latin America, Canada, China, before they set their strategies and have some understanding of, will overseas manufacturing be affected? I think companies are looking to bring back jobs to the United States. They're looking to deploy AI. They're looking for less regulation so that they can move in more nimble fashion in order to accommodate consumer desires. I think you're seeing a return to deals, and you may see less the kind of handbrake on M&A that we've seen from the FTC over the last couple of years.
All right, thanks to Trinity Chavez and Stagwell for that interview. Well, stay with us because up next, we'll take a closer look at what might be in store for Bitcoin and the entire digital asset industry, including stable coins in 2025. We'll be right back.
Viewers, a little brief overview of Arcus.
Arcus is a networking company. Essentially, we are kind of deep down in the plumbing that enables a lot of the packet flows that happen between computers that are in data centers and in between data centers and edges. And a lot of people have heard about companies like Cisco and Juniper and Arista, as well as Ericsson and Nokia in other parts of the world. So we are essentially a new age, next generation networking that does things similar to what Cisco's and the Aristas of the world do.
What sets you apart, though, from your competitors?
We are a programmable, software-driven networking fabric for routing and switching. So typically our competitors sell boxes, and so the box could be a router or a switch that goes inside a data center on top of a rack or in between data centers. We have come up with a network operating system that is universally applicable on top of different form factors of hardware, different vendors. Like we sit on top of Broadcom's hardware, we sit on top of NVIDIA's hardware, we sit on top of Intel's hardware, and then we can become a common network framework and fabric for everything from the edge to the aggregation points to the core of data centers, which becomes super pertinent for the AI wave.
And what would you say your experience has been being a part of the NYSE Wired community and how it's helped leverage your exposure on a global scale?
Oh, it's been tremendous. First of all, I think it's a privilege being a part of this network. Just the interactions and engagement and the introductions. We had a great happy hour here at the NYSE, and it was fabulous to meet a whole bunch of new customers, prospects, investors. And with a company that's growing as fast as we are, and with the importance that we play in our customer networks, it's a great catalyst and essentially.
Welcome back, everyone. I'm Kristen Scholler here at the New York Stock Exchange. You might hear some clapping behind me, of course, as we see the NYSE security team get ready to take the podium for the bell. But turning back to the markets here, one of the biggest financial stories over the past 2 months has been Bitcoin's climb to unprecedented levels. Following President-elect Trump's victory in the U.S. race in early November, the price of Bitcoin trading below $70,000 a token on Election Day started its record run. Well, by early December, Bitcoin hit $100,000 a token, buoyed by Trump's nomination of known crypto bull Paul Atkins for SEC chair. A couple of weeks later, it hit its new all-time high of $108,000 a token before pulling back a little bit since. So what does it mean for cryptocurrency and Bitcoin in the new year? Well, joining me now to help answer this question is Kevin Latinity. He's the CEO at blockchain-based payments firm Borderless XYZ. Kevin, it's great to have you on the show today, and let's dive right in because Bitcoin might be a big topic of conversation for those with family and friends this holiday season, hitting, of course, that all-time high earlier this month. Where do you think the coin can go from here?
I think what we've seen recently is a transition from what in the US has been a very innovation-unfriendly administration, not into even a crypto-friendly administration, but just an innovation-friendly administration in general. And we know the Bitcoin markets have reacted extremely well to President-elect Trump's kind of victory here recently, along with the nominations that he's put. I think this starts a 4-year cycle, and we should expect not just the digital asset prices to grow over the next 4 years, but we should expect a ton of innovation in the digital asset space across Bitcoin, across other tokens, and across a lot of other use cases as well, like stablecoins and payments.
I do want to focus on stablecoins, as you just mentioned there. Those have been coming more into the zeitgeist of late, as we've seen the cryptocurrency space just gain so much momentum. What is driving the recent rise in stablecoins from your viewpoint?
There's a lot of adoption in stablecoins that's starting to come from the payment space. As digital assets become more prolific around not just the US, but also in other parts of the world, especially in emerging markets like Latin America, Africa, Southeast Asia, and those sorts of regions around the world, people are realizing that sending value on a blockchain, i.e. kind of stable coins to a wallet, is a much faster and cheaper way of doing global remittance versus doing it through correspondent banking systems, doing it through the PayPals and TransferWise and fintechs of the world.
What does that mean for the U.S. and, of course, the global operation?
I think for the US, we're expecting to see a lot of startups that are focusing on building the next generation payments and technology companies. And they're all starting to come back to the US, which is really interesting. About a year ago or 2 years ago, we started to see this large trend, which was an exodus from the US. A lot of these companies were starting to become headquartered in London, starting to become headquartered in the EU that recently passed the MiCA regulations, going to jurisdictions where the regulatory landscape was friendly for new tech companies that were building on this technology layer. And now we're starting to see that come back to the US, which is a great sign.
And what are some of the challenges faced with this mass market stablecoin adoption?
I think you have kind of two sides of this coin. On one hand, you have the validation. And a lot of people ask, is this a fad or is this something that's going to stick? And I like to point kind of the enterprise players that are playing in the space. So Visa launched a new product to help banks tokenize currencies and create stable coins. PayPal has launched their stablecoin, PYUSD. Robinhood and Paxos and Anchorage created a consortium that launched a new stablecoin called USDG. But part of the issues that we're still seeing is there's massive fragmentation. People outside of the kind of blockchain industry think of a stablecoin as a singular thing, when in reality, you have dozens of different stablecoins running on dozens of different blockchains that are all supported by different companies around the world. And you don't have a unified layer or unified infrastructure product where somebody that's building in this space can say, I want to go between, real money, for lack of a better word, and stablecoins anywhere in the world in a single place. Those things haven't been built yet. And I think those sorts of things, which is candidly what we work on at Borderless.xyz, those are the giant unlocks that are going to help bring this mass market.
Interesting. Well, researchers we see are warning about the risk of a quantum computing attack on cryptocurrency and what it could mean for the industry. Kevin, is this a possibility? What are the chances that it could actually happen?
I'm certainly not the world's foremost expert on cryptography and some of those things. I can tell you from kind of colleagues in the space that I've spoken to, people don't seem to be overly worried. Certainly quantum computing represents a giant leap forward in our ability to do things like break cryptography. But there's already been several blockchain innovations that have created what they think, or at least claim to be, quantum computing proof cryptography. So the space will adapt, and it seems to be a non-issue.
Google's new quantum chip, Willow. What does that launch mean for the future of Bitcoin and other cryptocurrencies in the space?
When you think of the blockchain, a lot of people think of the blockchain as some sort of a ledger, right, that keeps track of accounts and balances, for lack of a better word. But really, at the end of the day, a blockchain isn't just a ledger. A blockchain is a computer. And tokens are programmable, and therefore tokens are actually software. So when we have innovations like the Willow chip that can radically improve the amount of compute that can be done, I think that's tremendous for the blockchain space. I think that means that you're giving more powerful hardware and more powerful computations to the world's biggest open software platform. And that's only going to spur more innovation and more growth.
Kevin Latinity, CEO of Borderless.xyz. Kevin, thank you so much for joining, especially ahead of the
Thanks for having me.
holidays.
Happy holidays.
All right, everyone, will stay with us because up next we will have the opening bell.
Right now, you're starting to see some trades develop. You can argue it a couple of different ways. Stanley Druckenmiller just this week argued that market's pricing in a Trump victory. If you look at things like small caps and cyclicals and Bitcoin, areas that might get deregulated more, might force more M&A, that's very much a Trumpian trade. And Druckenmiller's point was that if you look inside the market of the internals, you're seeing that. Others would argue, well, if you're counting on a Trump presidency to withdraw from, say, Ukraine, then why is Raytheon at all-time highs? Why is Lockheed at all-time highs? Why aren't a lot of exporters pulling back in their stock price if, in fact, we're going to be putting universal tariffs with the risk of retaliatory tariffs from other countries? So you can kind of slice and dice it any way you want. The Times did a piece a couple of days ago looking at how Harris's economic policy has evolved. And part of their argument was that she's been listening to some Wall Street business types and even some West Coast business leaders, Mark Cuban, Aaron Levy, Reid Hoffman, Reed Hastings, who have all come to her support and maybe are whispering in her ear, hey, we would love it if you'd just take an easier stance on antitrust or crypto or all things like that it would very much be in a business-friendly manner. So, is she listening to that? There's a difference between what you say to a voter and what you say to a donor. And some of the conversations we've heard about among the donors is that she is saying, I hear you. At the beginning of the year, we were counting on 6 Fed cuts this year. We didn't get that. Markets at record highs. So, in fact, the whole hiking cycle, the bull market has just gotten stronger and stronger. So we had this discussion a lot on air. Oh, the market's going to be so disappointed if we don't get the Fed cuts. No, the market.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the Exchange. And in just a moment, the Stock Exchange's internal security team is going to celebrate the opening bell. This moment, of course, recognizing the team's hard work and dedication to keeping this building safe for both employees and guests. We'll see Chief Security Officer Kevin Fitzgibbons do the honor. And let's take a look at the podium. to see the NYSE internal security team up there on the podium, getting the cheers they deserve, of course, keeping all of us safe inside this historic institution for many years. Well, the markets are officially open for trade on this Tuesday, Christmas Eve. It's a holiday shortened session. The market will close at 1 p.m. Eastern, but we do see fractional gains today at the open, adding to gains yesterday. Rejoining me now is Jason Ware, is the Chief Investment Officer and Chief Economist at Albion Financial Group. Jason, now that we are open for trade and we see a little bit of buying in this market, albeit perhaps light volume given the holiday, do you expect that the Santa Claus rally will play out on Wall Street this year?
Yeah, good to be back with you. Just going off of probabilities here, right? Because we're talking about a very short period of time and anything can happen. I mean, clearly headlines are going to dictate which way we go. If we get positive headlines over the next few days, or maybe just no headlines, no news is good news kind of thing. I think Santa Claus rally can do its thing. If we get anything negative coming out of the incoming administration regarding tariffs, that could be a challenge. In terms of the economic data, it's fairly quiet between now and year end. So look, I mean, probability is, like you said, 73% chance that we see a positive Santa Claus rally. So I'm just going to go with that.
Yeah.
See what we get.
So it was interesting to see. We saw a rush of new money, $141 billion come into the U.S. equity market in the 4 weeks during November, according to global data. That was the strongest 4-week run that we had ever seen on record, again, according to the data. With money that's been on the sidelines, unsure of what the future might hold from an inflation standpoint, perhaps even a political standpoint, do you anticipate that there is more money to be put to work in this market as we head into 2025?
Yeah, I think the answer is unequivocally yes. If you look at the money that's sitting on the sidelines, as they call it, money market funds have continued to swell within the context of higher yields, right? We saw the Federal Reserve aggressively bring up short-term rates, and of course that flowed through to money market funds, and you were getting 5.25%, 5.5% just a couple of months ago, but that is still, a fairly high number. It's, 4.5-ish, a little less than 4.5% in money market funds. So there's still a lot of cash parked in those funds earning yield. And I think as, we get into 25 here, there's no reason to believe that money can't come out of area and look for bargains in the stock market, or just chase good stocks that are working.
So we've talked a lot about U.S. stocks. Obviously, you're bullish based on fundamentals ahead. What does that mean for bonds and even international equities?
Yeah, I'll work backwards. International equities continue to look attractive on both an absolute and relative value basis, but that hasn't been enough to get them off of the mat. They continue to struggle, just given the fact that if you look around the globe, the United States economy is really looking kind of, outside of things like India, where I think economic growth looks really strong and is accelerating. The U.S. has a pretty good balance of growth and inflation that's coming down and earnings that are going up. So, and of course, we have the most innovative companies, as evidenced by the Magnificent Seven. So that's been a cocktail for good returns in the U.S. But when you go across the pond to Europe, or if you go over to Asia, particularly China, there have been bigger struggles. And I think that's been represented in equity prices that haven't done so well despite that relative valuation. But I will say, final point on this, the ECB is likely to cut more than the Fed in 2025. So maybe if the economy holds up there and we get more cuts in Europe, maybe that's something that can help resuscitate stock returns there. Real quick on bonds, we still think bonds look good here on as far as like a 60-40 portfolio. You can lock in yields in the corporate bond world that are low fives, and I think that looks pretty good long term if you're an investor that needs bonds.
Interesting. So when it comes to the international space, Jason, what I'm gathering is developed markets might be more on your radar as opportunities in the new year than emerging markets. Is that right?
It's hard to paint with such broad strokes, right? Emerging markets, like I'm not bullish on China, but I think there are areas in the emerging markets that look interesting. But yeah, I mean, if you look at our portfolio, we have a small allocation toward developed markets overseas and very little in emerging markets. So I think that's fair.
Cryptocurrency, is Bitcoin something you've been buying?
It's not. I mean, full disclosure, I own some personally, but as far as for our clients, that's not something that we have been proactive on for our client base. If clients are interested, we certainly we go down that path with them. But no, we are not proactive in crypto at Albion.
What else do our viewers need to know, Jason, as we head into the holidays and get ready to start a new year?
Well, first of all, enjoy the holidays. Don't obsess about the stock market when you're spending time with friends and family. But beyond that, just stay calm and keep investing. There's going to be volatility. It's not going to be up every single day. We're going to have periods of pullbacks and corrections, and that's a natural part of the experience in investing in equity markets. But as you take a bigger picture and kind of zoom out, the fundamentals still look good. And I think, if you own quality companies and are diversified and have the right asset allocation, then 2025 can be another good year for investors.
Long-term plan, goals, enjoy the holidays, all good things to take away. Jason Ware, thank you so much for joining us double duty today before and after the market opened. Jason's Chief Investment Officer and Chief Economist at Albion Financial Group. All right, well, stay with us because up next we'll talk about Netflix tackling a new challenge, and that is exclusively broadcasting NFL games tomorrow on Christmas Day. We'll tell you more up next.
A pleasure. So I want to start off by talking about the company. Tell me about FISNA.
FISNA is short for physical DNA, and what we do is we analyze the physical world and turn it into code. And what that really means is that we open up the floodgates of all the potential of AI to what's physical, and we're able to do things that weren't possible in 3D before, right? We can take 3D designs and use them to automate things like we have autofill for 3D. We can improve supply chain decisions so that you're able to find the same part from a different vendor because it has a different part number, and save a lot of money that way, and make a lot of other intelligent decisions for your company or your Department of Defense in some cases, another group we work with, for things like inventory management, part acquisition, part maintenance, et cetera. And so we work in a various number of industries, but it's been great. Over the past year, our revenue has grown about 10x year over year, and a lot more to come this coming year. And it's been great we've got great supporters. We have Sequoia Capital behind us, Drive Capital, Google Ventures, and several others that have been just fantastic to work with.
So now, when it comes to search, what do you have here that others can't do?
So the secret sauce that we have is this patent around 3D intelligence. That really allows us to normalize that 3D data and essentially allow computers to do everything with the physical world that they were previously able to do or currently able to do with things like text, right? So being able to identify, in some cases, manipulations that have happened to 3D models that might have happened as a result of like a cyber attack, or things like, as I mentioned, autofill or procurement decisions. Is this the same part? Is there a deviation in the part? Can we use this as a suitable alternative? And getting really deep intelligence out of models that weren't possible before. It's kind of akin to if you were, let's say you were a healthcare company and you were trying to use AI to evaluate humans and how you can help them. Well, right now in the 3D world, think of it like analyzing pictures.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Well, the NFL has made plenty of moves into the live streaming space. For example, we saw Amazon Prime Video exclusively broadcast Thursday Night Football and the annual Black Friday game. Meanwhile, Peacock achieved live streaming records when it broadcasted an NFL playoff game last year. And now Netflix is on deck. Tomorrow, the platform will exclusively broadcast NFL games for the first time. We'll see the Chiefs versus the Steelers at 1 p.m. and then the Ravens take on the Texans at 4:30. Now, Netflix is reportedly paying the NFL about $150 million for both of these games, and the partnership is really just starting. Netflix is also going to carry Christmas Day NFL games in 2025 and 2026. Well, joining me now with more is Eric Fisher, newsletter writer at Front Office Sports. Eric, thank you so much for joining, especially on this Christmas Eve. And as we await that big game tomorrow, how big of a moment is this for Netflix?
It's huge. They've really steadily been making a move into live sports and entertainment. They've got a WWE deal. They just did a FIFA deal for Women's World Cup. But there's nothing like the NFL. And to have sort of the biggest of all the leagues out there, this is really a seminal moment for the company.
Interesting. So, given some of Netflix's live streaming challenges, we saw the Mike Tyson Jake Paul fight last month. How much pressure is riding on tomorrow for Netflix?
It's huge. It is. I sort of think of the old NASA adage that failure is not an option here, and for Netflix, failure is really not an option. That we sort of talk about these live sports ambitions. They claim they've got a handle on it. We'll obviously see come Wednesday, but again, failure not an option for Netflix here.
So we'll see Netflix start broadcasting WWE Raw events in 2025. Eventually, the FIFA Women's World Cup. Do you think we could be seeing a majority of live sporting events shifting from cable to streaming, and in what capacity?
What Netflix has done has been a little bit more targeted. They've not been as aggressive in this area as Amazon, but again, nothing really aggregates audiences in the way that sports does. So I think Netflix will continue to make more bets in this area, but it's going to be in, again, this more targeted fashion where maybe the contracts aren't as long and they can be a little bit more judicious on production costs and some of these things, but they're going to continue to be active for sure.
Okay, so let's transition the conversation now to the NFL. We talked about what's at stake for Netflix, but what do you make of the NFL's strategy to directly challenge the NBA when it comes to playing on Christmas? I can attest to this. I'm going to the Knicks game at MSG tomorrow. But these games are on a Wednesday, not a traditional football Sunday.
Well, for the NFL, what they've really done is they're trying to replicate their Thanksgiving strategy. The Thanksgiving games traditionally have been the biggest audiences of the entire regular season. And this is another major holiday where you have a lot of a gathering, a lot of time to watch games. And we saw this last year where they had huge numbers. One game in particular where the Chiefs and Raiders get more than 29 million people. And even though this is an unusual day of the week for NFL play, they're making it happen because the numbers are probably going to be there once again.
Who do you think wins tomorrow? We got 2 NFL games on tap. Who are your picks?
Well, I grew up a Steelers fan, so there's a little bit of a head and heart conflict there. The Chiefs are still the defending 2-time Super Bowl champions and 14-1, but I like my Steelers in that first game. And the Ravens actually just beat the Steelers last weekend. They're actually getting a little bit of a stride there. So I actually like the Ravens, the road team in that second game.
All right, we'll be watching closely. I'm curious here what long-term effects you think that the NFL now sharing Christmas with the NBA might have.
Well, it's almost like the NFL's kind of come and taken the NBA's lunch money. They're both playing on this day, but what has traditionally been an NBA day is now quickly becoming an NFL day. The NFL numbers, the audiences were way in excess of what the NBA did, and I expect a similar situation again tomorrow.
Okay, so we've now seen 2 Black Friday games, preparation to play a consistent Christmas slate. Why do you think these dates in particular, Eric, have become lucrative for the leagues?
So I spoke to this a little bit before with the Thanksgiving stuff. The NFL really sees itself as with a big opportunity to sort of weave itself into that family communal culture, that holiday culture, that when it comes time for friends and family to gather around these major holidays, the NFL wants to be there and they feel like they should be there. Again, it started with Thanksgiving, it's now moved to Black Friday, moving to Christmas in a big way. And again, when the holidays happen, the NFL wants to be there.
So we currently see the Super Bowl broadcast on cable networks. Advertisers obviously pay big bucks to advertise 30-second spots, short clips in that major event each year. What do you feel needs to happen before we might see an event like that transition to a streaming platform?
Well, again, the Super Bowl is a whole other thing. We had a record audience of more than 120 million domestically for that game. The biggest streaming events that we've seen domestically have been less than half that. I think we still need to really have a further build out of the internet infrastructure to be able to handle streaming of something the size of the Super Bowl. We're perhaps getting to that probably going to see that in our lifetime, but we're not there yet. There's still nothing that sort of beats the scale of broadcast television. So it's going to take some time, but we may ultimately get there.
Eric Fisher, newsletter writer at Front Office Sports. I'm sure you'll be watching tomorrow. I'll be at MSG. We appreciate the time. Thank you.
Merry Christmas.
Merry Christmas. All right, earlier this month, NYSE listed energy firm GE Vernova visited the floor of the stock exchange, coming off its investor update right here in Manhattan. Trinity Chavez spoke with GE Vernova's CEO. More about it. Take a look.
We had our second investor update of the year yesterday after our spin on April 2nd, and we were really talking a lot about how the markets are accelerating on many levels today. I mean, the world needs electricity, and GE Vernova is very well positioned to serve that, both with increased demand for both grid equipment and gas turbine capability that's led to us taking our revenue projections up from mid-single-digit revenue to high single-digit revenue. At the exact same time, all three of our business segments are expanding margin, and we're generating a lot of cash. So that's why yesterday we announced our first dividend effective Q1 25 and a $6 billion stock buyback program.
Amazing. And what would you say are other big headlines, other news that are coming out of GE Vernova?
Well, we are also investing in the long term today. So we talked a lot about the $9 billion we're going to invest in the next 4 years in both R&D and CapEx to serve this market. We spent time talking about long-term technologies like small modular reactors and the role nuclear is going to play. Our grid software business and the role that's going to play in the world going forward, along with things like carbon capture that will ultimately attach to gas turbines in the decades that follow.
AI and data center electricity demand are huge topics of conversation right now, especially in this sector. But how would you say this is impacting GE Vernova's overall business strategy?
It's becoming a clear market opportunity for us. Yesterday, we talked about the fact that we've secured 9 gigawatts of new gas reservation slot agreements for new gas turbines that are very closely tied to the hyperscaler AI demand. And we think this is just the beginning of what's going to be a huge market opportunity for us. This year, we also do a lot of electrical equipment deals with the hyperscalers. We'll do over $500 million of orders on things like transformers and switchgears. So we're just getting started, but there's a lot of opportunity ahead.
Can you elaborate a little bit more on the nuclear side? How is the progress going and the pace at which GE Vernova is expanding?
There's multiple opportunities. It starts with the fact that we've got 65 plants in the U.S. right now running with our equipment. That we have opportunities to uprate and very quickly this decade provide multiple gigawatts of nuclear electrons to the grid. By the end of the decade, we'll have our 300 megawatt small modular reactors commissioned with our first plant in Ontario, Canada. And in the next decade, that's going to become a material part of GE Vernova and a more material part of the new energy capacity that's being built in the country and the world.
And 2025 is just around the corner. What would you say are some of the biggest things that you're looking out for when it comes to the overall electricity space?
Well, we really have to continue to focus on fulfillment. I mean, we've got the markets coming our way. We've got a growing backlog. Our equipment backlog is up 50% in just the last 7 quarters. So our focus right now is ramping up that fulfillment while doing it in the safest, highest quality way that we can.
And I want to know more about how you're supportive of sustainability and the renewable energy integration.
You bet. I mean, when we talk about sustainability, we talk about both electrifying the world and doing it in a cleaner way every day. And that's when we talk about the carbon intensity of our install base in totality. We can do that by applying zero carbon technologies to gas with things like hydrogen and carbon capture. We'll grow our wind business over time. We generally have about half of the market share with onshore wind in the US as an example, along with things we talked about like small modular reactors.
Yeah. And there's a lot of things that are impacting markets that are happening in our world. We're seeing a new administration take shape in January. Talk to me if that's impacted your business in any way and how you're addressing those challenges.
Well, when I hear the administration talk about energy strategy, they're talking very much about an all-the-above technology strategy that GE Vernova is very well equipped to serve. They talk a lot about U.S. innovation, U.S. competitiveness, using energy security for national security. Those are things that motivate us, both for the U.S., but to export that technology for economic development in the world and, frankly, for peace.
Key priorities for 2025?
We'll have our first full year as a public company. We've got real opportunities to serve this market. It starts with safety and quality, continue to use our growing cash balance in shareholder-friendly ways. We've got a lot to look forward to.
So Wipro is one of the leading global technology services companies. We are over 230,000 people, headquartered in India.
Oh, wow.
And our focus is on AI and leading with our AI strategy. So bringing AI into everything we do, our tools, our solutions, and our platforms to help our clients drive value.
What is the problem that you're trying to solve, though?
So all of our clients are looking for new sources of revenue, driving improved client experience, and delivering more profitability. So AI has the opportunity to truly revolutionize every industry, banking and financial services alike. And the opportunity with AI we're already seeing in terms of clients leveraging it to improve their experience, whether it's their financial advisors or their retail banking clients, to really make sure that they're giving that high-touch, trusted experience.
Are there any specific sectors that you're focused on from a business standpoint?
Yes, our wealth management for AI. We did a survey of 100 C-level execs in wealth management, and we found over 44% of them are already extensively using AI in their wealth management business, and 72% of them are already seeing it improve their competitive advantage, meaning the insights they have are making them work better with their clients. So what we're doing with wealth management, we're partnering with Microsoft as well, is to deliver a high-touch experience. So think about ultra-high net worth clients who have $100 million. They have financial advisors who take very good care of them. How do you bring that down to the clients that are 1 to 10 million, the mass affluent who are even below 1 million? How do you create that high-touch experience? And that's what we help our clients do with the platforms and solutions that we bring to them and leading with AI.
And how are you implementing your AI strategy, right, when it comes to investments?
Yeah, so last year we announced $1 billion investment in AI. And since then, we started with making sure we trained all of our employees on response.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, it is a holiday shortened session today. The stock market closes at 1 p.m. Eastern, of course, as we are wishing everyone happy holidays and a Merry Christmas. Of course, the market is closed tomorrow, too, but it does reopen like normal on the 26th. That's Thursday. Here's a live look at how the Dow is faring. Flat as can be, but still in the green, right? So people certainly preparing for the holidays. We had seen the major indexes across the board rise yesterday. Technology names, semiconductor stocks, a lot of the winners earlier on in this bull market and even this year, driving some of the gains this week. Now, today does start the so-called Santa Claus rally period. That covers the 5 trading days of this year, the 2 trading days of the new year. Let's take a look at this quick video.
I would say I'd start off with the Ray-Ban Meta smart glasses are a really great pick. Few $100, so it's a little bit on the pricier side if you're going to give someone a big gift, but it's a mix of a little bit of a wearable with sunglasses that have a camera built in, and you can take pictures, take video on the go. You can ask Meta's AI on the go to get some information in your ears if you want to, if that's your thing, and some listening on the go too. But yeah, that's a really good pick. Or maybe if you're a big coffee lover, the Ember Mug 2 Smart Mug. It's actually a self-heating mug. It's actually my daily mug as well. And yeah, if you're a coffee junkie, can't go wrong there. And then for gaming, I would say the game that just won Game of the Year at the Game Awards last night, if that matters to you, Astrobot on the PS5. Good for kids, good for families, and it's pretty accessible for even hardcore gamers too.
Nice. I would have to say that I love the coffee cup that warms up your coffee. I am a coffee lover, drink it throughout the day, and so it's really handy when you have to just make sure that it's always warm. But we're also seeing a lot of wearable technology, right, when it comes to the health and fitness sector. What are you noticing?
Yeah, there's been a big trend in the ring space, like actual wearable rings, instead of just being everything about a smartwatch. I like a smartwatch, but if you don't want to wear a watch, the Aura Ring Generation 4, the newest model, is a really popular option. Samsung's gone into that space too. It's a space that's kind of growing, but it's a way you can do some basic health tracking and some fitness tracking, but also sleep tracking is one of the strengths of a ring. It's a lot less cumbersome to wear that overnight than it is to wear a big bulky watch.
Have you seen any eco-friendly tech gifts this year that combine innovation with sustainability?
I wouldn't say we have too many picks that are super eco-friendly. The thing is that there's frankly a lot of e-waste when it comes to certain kinds of electronics. So I think it's more about, because I think there's a lot of greenwashing out there. There's a lot of companies that want to talk about how sustainable their products are, but it's really hard to say, especially if, like, a pair of earbuds, for example, wireless earbuds, you want to buy that with the knowledge that one day they're going to maybe go bad and not be really repairable. I think it's more about the decisions that we make. We got to keep pushing the companies to keep doing whatever they can to be sustainable. But, sometimes we got to try and make our own decisions and our own choices too.
We're also seeing a lot of smart home devices continue to grow in popularity. So which ones do you think make this season the best gifts? And are there any surprising new entries?
Yeah, smart home is a popular segment, and I would say that I personally love smart bulbs. I think they're like the easiest entry level into the smart home, aside from, say, a smart speaker. But I think smart speakers, you can get an Echo Dot from Amazon for like 20-something bucks, and it's they'll just throw them at you because they want to get into your home space and they want to have you using their ecosystem. But I think smart bulbs are a really great option. I use a lot of Philips Hue bulbs, and they're kind of just fun because you can easily change the color, set schedules, set automations from your phone, and yeah, they can. You don't need a whole lot of overhaul of your electrical or anything. Really just plug them in and connect to your Wi-Fi, and you're good to go.
Now, you mentioned some video games earlier on in the show as some of your top 3 tech gifts this year, but what would you say are the latest consoles and accessories and VR systems that are a hot ticket item this year?
So Meta just came out with the Meta Quest 3S, which is a lower cost model of their current Quest 3 VR headset. Really great option there as well. If you like VR and AR, if that's something to your liking. But I think in terms of games, the consoles are kind of pretty established between the latest Xbox Series X and the PlayStation 5 and the Nintendo Switch. There is there is definitely a new Switch successor coming in the new year. So if you're late to the Nintendo Switch for family or just for yourself, you have a huge library to pick from, but know that there is a new model coming of some kind. And PlayStation, Sony just launched the PlayStation 5 Pro recently. That is in our holiday gift guide, but it's a $700 console. It's really for people who are really pixel peeping. They want the best quality, but in a console versus a desktop gaming PC.
All right, that's going to do it for today's coverage. Everyone, from our team to yours, happy holidays, and thank you for watching.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.